fourth pillar. We are still going to 7. And the fourth pillar is going to be talking about policy-based fiscal strategy and budgeting. Policy-based fiscal strategy and budget. What are we talking about here? We are looking at the fiscal strategy and the budget. Are they being prepared with due regards to government fiscal policies? We cannot just be preparing budget anyhow. There must be a guideline, there must be a policy in place that guides how we actually prepare our budget, our strategic plans, and adequate macroeconomic and fiscal projections. Let's look at the performance indicators here. Performance indicators with respect to the fourth pillar. The first performance indicator, which happens to be PI 14, is the macroeconomic and fiscal forecasting. Macroeconomic and fiscal. If we say there's a particular policy that we follow in fiscal strategy and budgeting, then there must be a particular macroeconomic and fiscal forecasting. We have to look into the future. We have to be futuristic. We have to be proactive. So as such, we are looking at the ability of country to actually develop a particular robust macro and fiscal forecast, and which are actually crucial to developing a sustainable, you see, over the long run, you'll be able to develop a sustainable fiscal strategy and ensuring greater predictability of budget allocation. Now let's consider the second pillar here, which happens to be PI. Sorry, not the second pillar. We are still on the fourth pillar, but we are looking at the performance indicator, which is PI 15. Let's talk about the fiscal strategy itself. When we talk about fiscal strategy, is there fiscal strategy in place? We have different strategy in various of our works, Chandler, Johnson's Code, and Whittingley, and we have actually devised that strategy. We have to make certain plans in place just to look at how we can identification of our goals, our objectives, and we are actually delegating resources to it to actually meet with those particular goals and objectives. That's basically what we are looking at. So there must be a fiscal strategy, and this fiscal strategy is talking about the analysis of the capacity to develop and implement a clear fiscal strategy, and it also measures the ability to develop and access the fiscal impact of revenue and expenditure policy proposals that support the achievement of the government fiscal goals. We actually try to develop and assess the fiscal impact. What is the revenue and expenditure policy that we are having, and how it can actually support the achievement of our government. Okay, on revenue, we have a zero tolerance to a particular way that we generate revenue. Expenditure, we have a particular way. There must be policies in place that can support the achievement of the government fiscal goal. Then another one is medium-term perspective in expenditure budgeting. Yeah, there must be medium-term perspective in expenditure budgeting, and we are looking at the extent to which, and this PI is PI 16. Please let's note it. We are looking at the extent to which expenditure budgets are being developed for medium term within an explicit medium term budget. That's why you see most of the time when we prepare for the year, you still see how we are going to show it in the medium term. So we are just not like we are forward. We are trying to predict or look into the future just to be prepared for. We are in an ever dynamic environment, and as such, we are looking at the extent to which expenditure budgets are developed for the medium term within an explicit medium-term budget. We do it within an explicit medium-term budget expenditure ceiling, and it also examines the extent to which annual budgets are derived from the medium-term estimate. You see, it's covered that over the long run, we keep deriving our annual budget from the medium-term estimates. That's why you see at times when we prepare budget, you still see they will still disclose the figures for probably we are in 2021. You see something like 2022, 2023, and 2024. That's what we are talking about, medium-term budget. Okay, now let's move to the PI 17, talking about budget preparation process. When we talk about the budget preparation process, it's actually a performance indicator to show that policy-based fiscal strategy and budgeting are well done, and we are actually doing our fiscal budgeting on a particular policy that we have put in place. Now, the effectiveness, we are looking at the effectiveness of the participation by relevant stakeholders during the budget preparation. Do we have relevant stakeholders in the budget preparation process, including political leaders, and whether participation is orderly and timely. That's basically what we are looking at when we are considering the budget preparation process. Then lastly, under this particular um, pillar, we are looking at the PI 18, that's the performance indicator 18, legislative scrutiny of budget. Yes, this is what we mostly see, that the national budget will still have to approve the budget and all. It's just a performance indicator that there's a policy in place to control our fiscal strategy and our budget. This is the nature and scope of legislative scrutiny of the annual budget, and it considers the extent to which the legislatures scrutinize, they debate on it, and they approve the annual budget. Okay, now let's move to the next one. The next pillar, predictability, which happens to be the fifth pillar. Fifth pillar, that's predictability and control in budget execution. Is there predictability and control in budget execution? That's basically what we are looking at. The budget is being implemented within a system of effective standards, process, and internal control. Yeah, that's all what we are, and ensuring that resources are obtained and used as intended. That's what we are considering here. Let's look at the performance indicators. Number one, revenue administration. In terms of predictability and control in budget execution, we are considering the first performance indicator, which happens to be the performance indicator 19. We are still going to 31. Don't be scared. Performance indicator 19, that's revenue administration. We are just considering the procedure used to collect and monitor central government revenue. That's just what we are considering here. We are looking at what is the procedure that we set in place. Are they being appropriate in collecting central government revenue? And it relates to the entities that actually administer the central government revenues and the agency that administer revenue from other significant sources such as national. You know the agencies now that collect revenue. I don't have to start telling you. Now let's move to the next PI 20. Now, accounting for revenue. I love this so much. What is the procedure for recording and reporting the revenue that we have said that revenue administration, there must be an administration in place for the collection of revenue, isn't it? Okay. Now, how do we account for that revenue that we have collected? Are we together? How do we record the procedures for recording and reporting revenue collections, consolidating revenues collected, and reconciling the tax revenues revenue account? So that's basically what we are talking. And this actually considers both the non-tax and the tax revenues collected by the central government. Then let's look at the next, that's PI 20, predictability of in a year resource allocation. Predictability of in a year predictability of in-year resource allocation, in-year reserve allocation. Now we are considering the extent to which the Central Ministry of Finance is actually able to forecast cash commitments and requirements and to provide a reliable information on the availability of funds to budgetary units for service delivery. We can do this through cash flow. We are just trying to predict how will revenue flow throughout this year, and that's basically what we are looking at. Another one is that's PI 22, expenditure areas. Expenditure areas, that's PI 22. With expenditure areas, we are looking at the extent to which there is a stock of areas. We are looking at the extent to which there is a stock of areas and whether any systematic or any systemic problem in this regard is being addressed and brought under control. Are there stock of areas? Then how do we actually ensure that any problem in this system is addressed and brought under control? And that one is payroll controls. Payroll controls, we are still looking at everything under predictability and control in budget execution. With payroll control, we are looking at how the payroll for public servants is managed, how changes are handled, and how consistency with personal record management is achieved. Central government introduced a consolidated payroll system, and not everyone that let's put everyone on a particular single payroll, a consolidated payroll that will see it from there, IPPIS. And yes, we have seen how it has actually worked out, even though some people do not agree to be on it. Some actually agree to be on it, public servants. But that's actually a way to, like, the IPPIS is still a way to control payroll also. Let's look at PI 24, procurement. When we talk about procurement, key aspect of procurement management, including transparency of arrangements, use of open and competitive procedures. Yes, there must be an open tender, and monitoring of procurement results, and access to appeal and redress arrangement. That's all what we are talking about under the procurement. PI 25, we are talking about the internal controls. That's the performance indicator 25 under the predictability and control in budget execution, internal controls and non-salary expenditures. Here we are basically looking at the effectiveness of general internal control for non-salary expenditure. So this one does not relate to any salary expenditure. How do we actually put necessary internal controls in place? Then the last one is the internal audit. That's PI 26 under predictability and control in budget execution. That's PI 26. That's internal audit. I don't know if I'm too fast. I don't know. Now, looking at internal audit, we all know what internal audit is. We are just looking at the standard and procedures applied in internal audit. Are there money value for money being done? Are they carrying out? Is there necessary independence? Are they being effective in carrying out the internal audit? It's not only the need for internal audit to be in place. Are they carrying out their work? That's the question. Now let's move to the next pillar, which happens to be the pillar 6. That's the sixth pillar. The sixth pillar, accounting and reporting. Accounting and reporting. When we talk about accounting and reporting, are they accurate? Are they accurate and reliable records? Are they accurate and reliable records being maintained, and information produced and disseminated at appropriate times to meet decision making? You know, one of the elements that we saw that enhances the credibility of information is timeliness. Are they being disseminated at the right time to meet decision making, management, and reporting needs? That's all what we are talking about with respect to accounting and report. Now let's talk about, it has three performance indicators. That's three performance indicators. So let's quickly talk about the three performance indicators with respect to accounting and reporting. Now let's look at PI 27, which is financial data and integrity. PI 27, financial data and integrity. And the extent, we are looking at the extent to which treasury bank accounts, with respect to the financial data that you present, what's the integrity? You get, that's what we are looking at. Here we are considering, sorry, here we are considering the extent to which treasury bank accounts, the suspense accounts, advance accounts are regularly reconciled, and how the process supports the integrity of the financial data. Are we together? Are we considering the relevant standards with respect to the way we prepare our accounts? Or what's the integrity? What are the things that can enhance the integrity of this financial data? Those are what the things we are talking about. And the integrity of financial data will actually show is a performance indicator in as regards that particular pillar, accounting and reports. Then PI 28, we are talking about in-year budget reports. In-year budget reports. Now, with in-year budget reports, we are looking at the completeness and accuracy. But for completeness, accuracy, and timeliness of information on the budget execution. Yes, we are looking at the consistency of the in-year budget reports, more like an interim report, with budget coverage and classification, which allows monitoring of budget performance and, if necessary, timely use of connective measures. That's why you see that you see mid-year budget report. People usually do mid-year budget report just to know, okay, how are we carrying out our budget? What is our you see necessary monitors are being put in place we are looking at the accuracy and timeliness of the information on budget execution, and also the consistency of the mid-year budget report with the budget coverage and its classifications. So that's basically what we are looking at. Then let's consider the next performance indicator, PI 22, and which happens to be the last year. That's annual financial reports. Talking about annual financial reports. When we are talking about annual financial reports, we are looking at the extent to which the annual financial statements are complete, timely, and consistent with general accepted accounting principles and standards. I know we must have heard of this gap. Generally accepted accounting um, principles and standard gaps. Now, we are looking at how have you been able to prepare your financial report. Definitely, we have to make our annual financial report, isn't it? Now, it's not like we should just make it. Are they complete? Are they timely? It's more like you bringing it at the wrong time. It can't work again. It can't actually influence decision making of the users. You get, so it must be timely also, and it must be consistent with the necessary framework, financial reporting framework, and which I said that it must be generally, it must be consistent with the generally accepted accounting principles and the standards. Last one, we have actually treated 29 PI, that's performance indicators. So we have two more indicators to go. We said there are 31 performance indicators and we have 7 pillars. This is the last pillar, talking about external scrutiny and audits. External scrutiny. Since we have prepared the information, there must be the framework put down that okay, for us to actually know that there is proper public finance management and accountability, then there has to be external scrutiny and audit. That means that public finance are independently reviewed, just like we have in the private sector also, where you see which the CAMA has mandated that listed companies should ensure that an independent examiner examines their books to ensure that to give an opinion as regards truth and fairness in all material respects, and to see if they have complied with statutory and legal regulations and principles that has been laid down, or financial reporting standards. So that's basically what we are going to do, and the same thing is applicable here, that public finance are independently reviewed and there is external follow-up on the implementation of recommendations for improvement by the executive. So when this particular independent parties review is, then whatever recommendations that they are coming up with, then there should be an external follow-up on the implementation of such recommendations, just to ensure that there is proper improvement. Now let's talk about the PI30, which happens to be the first performance indicator. The PI30 is talking about external audit. And external audit, the characteristics of external audits, including the audit of the government's annual financial report and the independence of the external audit function. We are looking at it. That's a performance indicator. What is the characteristic? Is there proper independence? How do we carry out the audit of government's annual financial reports? So these are all the things that actually point us to external scrutiny and audit. Then lastly, we have PI31. Sorry. PI31, which is the last performance indicator under this particular PI. That is the legislative scrutiny of audit reports. Yeah, we had legislative scrutiny also in our, don't forget that we had it under the policy-based fiscal strategy and budgeting, where we spoke about this legislative scrutiny of the budget. Yeah, that should not also go away when it comes to the external scrutiny and audit. So there should be a legislative scrutiny of the audit paper, and this is the extent to which legislative scrutiny of the audits of the audited financial reports, the audited financial report of central government is timely. Yeah, they must do this legislative function of scrutiny timely, and it must timely, significant, and transparent. Yes, it must be significant and transparent. And it also assesses whether the legislative or the legislation issues recommendations and follow up on their implementations. Those are the things we're actually talking about with respect to legislative scrutiny of audit report. I think we've been able to assess. Don't forget that there are 31. We have 31 performance indicator. That's 31 PIs. Then we also have 7 pillars, which pans across those. We have those 31 PIs, performance indicator pans across those 7 pillars. And we'll be able to go with respect, we've been able to assess each of these. If a particular country is saying that, with respect to our public finance management and accountability, we are actually doing fine, then you must actually have these particular pillars and performance indicators in place. So with this, we've been able to come to the end of this particular topic. I hope you enjoyed it, and as a result of this, I'll be stopping here, and I want to wish you bye for now. Thank you.